Hi, good afternoon, everyone. So thank you for joining us for today's event, and thank you BBLAM for inviting Invesco. Maybe just a quick comment. I understand this morning in the panel, you heard many about global trends. You know, geopolitical risk, inflation. What will happen in you heard about India, you heard about many aspects of the world. I don't want to repeat everything they say because I think a lot of the specialists has very strong and interesting comments that they've made. But the one thing I'd like to share with everyone is really maybe from your perspective as Thai investors. And when you're investing not only in local market, Thai equity, Thai fixed income, Thai bond and cash investment, when you are in your journey of investing globally, maybe some of the things that you should think about that's right for you as an investor. So today I know we'll talk about Asia. I've been in this industry for quite some time, about 30 years. I hope I don't look that old, but I have been doing this for a long time. I was just saying earlier, when I first started in this industry, and I come from Hong Kong, so many of my clients invest in Hong Kong stocks. They invest, they buy currency, they buy gold, they buy many things, but they don't really buy funds. 30 years ago, now they buy a lot of funds, but when they first think about investing overseas, typically. Sometimes there is a lot of news story. You hear, oh, I should buy Europe. I should buy high-yield bonds. There are a lot of stories to get you interested. But I think many times when you think about your own investment journey, when you move away from home market, there are probably two destinations that you often go to when you think about investing overseas. Normally, you will want to go to the biggest market, the U.S. But U.S. equity very big. You can buy U.S. stocks. There's a lot of news about big U.S. companies. So a lot of investors think about U.S. investment, which is okay, which is fine. But that's a natural preference. You go to the biggest. But I think when I think about Asian investors, when I think about Thai investors, the natural next step may not be U.S. Maybe the ASEAN market, because you have very diverse economy in the ASEAN market. Thailand, obviously, which you have investment in, but then think about Malaysia, think about Indonesia, Vietnam. There's a lot of many Asian markets. ASEAN is one region, but then obviously this morning you heard about India, you heard about China, and every market has different up and down. So maybe you heard from the speaker, the Indian speaker, India Bowl. I like India. The last 20 years, great story. But how many of you have been actually investing in India for 20 years and actually see all that gain? You might be buying India, and maybe last week you have done well. But I still remember a time when the Indian market was moving down, moving up. It's always a cycle. Maybe today we talk about China, a bit of a downturn, but you still remember the time when China was really good, and now maybe a little bit downturn. But when you think about Asian regional investment, this is where you can capture the different cycle. So I think as a local investor, when you think about expanding your own portfolio, and I really hope the next 45 minutes is very useful for you in terms of understanding Asia and how that works for you. Anyway, thank you very much. Have a great, wonderful time, and I hope I get a chance to speak to everyone soon. Thank you.
Thank you very much, Mr. Terry, for giving a warm welcome speech. Okay.
Thank you, Terry. Thank you, Kun Punsit, for being our moderator today. And hi, everyone. Thank you so much for signing up for Invesco session. So let me do a quick introduction of myself. My name is Julia. I cover the Southeast Asia distribution and client servicing activities at Invesco. Yes, so thank you again for being here today with us. So just before we start, I just want to let you guys know that you can scan the QR code behind me so that if you have any questions, we can address it towards the end of our presentation. So just in case you're not very familiar with Invesco, I can quickly give you guys an overview. Yes, so Invesco, we are a global independent global investment firm. We manage a total of $1.6 trillion for our clients worldwide. And we have on-the-ground presence in more than 20 countries. We have specialized investment teams managing different asset classes from your traditional equities, fixed income, multi-assets, to passive instruments like ETFs, all the way to alternatives in both public and private space. So just now, Terry, our CEO, my manager Ken, and myself, we're based in the Hong Kong office. So Hong Kong is our APAC headquarters. We fly in and out of Thailand very frequently to meet with our key partners here. And BBLAM has been a long-term partner of ours. They launched the B Asia Fund in 2018, so 8 years ago, they launched this feeder fund with us. And since then, we have been coming back every year at this annual investment forum. So it's an honor to be back today, and it's always great to see all the familiar faces. Thank you, everyone.
Yeah, it's like we've been partners for 8 years with Invesco. I think we are very thankful to have you as a key partner of our success. Okay, so let's start.
Sure.
Sure. Okay. How about the first question is, can you tell us the investment objective of the fund, the BA share, and its feeding fund into the Invesco Asian Equity Fund?
Sure. Let me tell you more about B Asia. So just to reiterate what I just said just now, B Asia is a foreign investment fund managed by BBLAM. The underlying is Invesco Asian Equity Fund. So B Asia actually feeds into Invesco Asian Equity Fund. The objective is to generate capital growth through investing across Asian markets, excluding Japan. So we are active managers. We manage a high conviction portfolio. We hold about 50 to 60 stocks on average with an investment horizon of 3 to 5 years. So the main objective really is to beat the market and to beat the index over the long term. So if you see here, the market actually on an annualized basis generates about 6% return every year. So we want to beat that so that we not only provide our investors with good performance, but alpha performance. So as you can see here on the slide behind me, our fund track record actually dates all the way back to 1998. So on an average, we are able to generate over 10% return annually. So that means we say what we say we can do. We beat the benchmark quite comfortably. Yeah.
So can just want to ask that the fund has very long of lifetime since the inception. And it is outperformed pretty solid outperform. So just want to ask about the fund manager.
Yes.
How does the fund manager, how do they make a stock selection, and how the strategy to drive to meet the fund's long-term objective?
Sure. So you can see here, this is the full investment team. The whole team is actually based out in Henley. So I'm not sure if you've heard about Henley before. It's actually a town that's 2 hours away from London. So Invesco has an investment center that's by the river. So it's a very nice campus there. The whole team is actually based there. This fund is led by Ian on the top left-hand corner. So along with his partner, William here on the top as well. So both of them have been working together on this portfolio for a long time. Ian actually started his career 29 years ago, and he's still with Invesco today after 29 years. And then William also joined Invesco 18 years ago. So this is the whole team. They work very closely together. So all the other fund managers, assistant fund managers all contribute to generating ideas to the fund. We have Fiona here. So she is based out in Singapore. They all take turns to meet with companies. We also recently hired latest addition to the team, which is Mark here. He's a local Chinese, so he specializes in researching and analyzing our Chinese equities. Overall, you can see here, it's a very experienced investment team. They manage over 13 billion US dollars across Asia and emerging markets equities. Yeah.
So I have to say that 29 years of experience, it's pretty long. Like he passed the Asian crisis until the COVID.
Yeah, so he has seen everything through different cycles.
So he must have some of the good outlook. So I just want to ask that to the stock market right now. Last year we see that the U.S. market has a strong rally in 2023 compared to the Asian stock. It is quite underperformed the U.S. market. So just would like to know about how Asian equity has performed last year. What's the key driving factor?
Sure. Before that, perhaps I can tell you guys a bit more about the investment philosophy of this team, like how they do stock selection, and then I'll address your questions on a recap on Asian markets last year. So here on this slide, it's a nutshell of how the investment team invests. So first of all, I mentioned just now, the objective is really to beat the market and beat the index in the long run. So the market generally generates about 6% annualized return. So in order to beat that, what we try to do on the stock selection process is that we only invest in companies that we think can generate at least 10% return. So we think that having that benefit, that discipline on the stock level will help us achieve our long-term objective on the fund level. So how we do stock selection is basically always look at three components. The first one is growth prospect, and the second is valuation change, and lastly is dividends. So we are style agnostic. That means as long as we think that they can generate 10% return, we don't mind whether it's a value stock or a growth stock. So we have a good mix in our portfolio. So some stocks are cheap, so we buy them. Some stocks give us high dividends, we like them. And some stocks give us growth prospects. So we have a good mix of all of the different kind of stocks. Yeah. Yeah, so this graph is actually an illustration of how they do stock selection. Actually, there's no secret sauce. We try our best to buy low and sell high. We are valuation driven. Just now I mentioned we are style agnostic, but in reality, we do have a value tilt. And the reason behind is because we focus a lot on valuation. So we actually dedicate a lot of effort to determine how much we think a company is worth. So here's a visual representation behind me. So after our team does our own research, we come up with a fair value. So this is the price we think that we should pay for this stock. And we target to buy when it's below what we think it's worth. And then we sell when we hit the band on the red part, so that we sell and take profit when our investment case plays out. And I just want to tell you guys why we're different as well. It's because we are contrarian investors. When I say we're contrarian, it means we are different. We dare to be different. So here, this picture, I think it's a good illustration to tell you why we are different. So just like the fishes, they are all swimming towards one direction, but we are really the red one there. We're swimming away from the herd, so we're daring to do something different. We spend a lot of time to investigate on each and every company that we hold and we look at in the universe. And then what we try to do here is that we actively seek for areas of the market that are temporarily out of favor. So we look at companies that are struggling, but temporarily only. So if we're confident that this company can get out of this temporary situation, then we are comfortable. It gives us the confidence to buy these stocks at a low discounted price. So we can stay invested until our investment case actually plays out.
That's great. Yeah, it's a great idea that I agree with this idea that sometimes we don't want to buy something that is too expensive. And sometimes some price correction, I think, is a good opportunity to get into the market.
Correct. So when we say we're valuation driven, we always avoid overpaying companies. Right. So just now, if you guys attended the morning session, my manager Ken actually said there are no bad assets, there are only bad prices. So we need to pay a lot of attention on how much we pay for a stock. Yeah.
Okay, so do you want to say something about the stock market last year? What happened to the Asian market last year?
Sure. So 2023 was indeed a very unusual year. We call it a year of divergence. So if you look at Asia, including Japan, the index actually went up about 12%. But if you removed Japan, I think we had about mid-single digit growth. So it is true that US had a much better performance and Asia suffered a little bit. And that's because Chinese equities didn't perform well, and there were lingering concerns around their macro and fiscal as well as corporate fundamentals. And also, I think the main reason is because the COVID recovery story disappointed a lot of us, including ourselves. Yeah, so perhaps we can do something fun. We can actually,
You have a game to play.
Yes, so
we are gonna have a poll to play.
Yes.
So how about let's do a quick poll that which country do you think they are the top three best performer last year? Anyone can raise their hand, and
we have prepared some gifts. You can see here my colleague Leanne, she's holding some collapsible coffee mugs for you guys to claim. Even if you don't get it right, we will still give it to you.
Japan number one.
Oh, very good. Japan number one. Any other guesses? India. Okay. One more. Korea. Singapore. Okay. Taiwan as well. Okay. So here's the answer, and thanks for participating, everyone. So the top three best performing markets are actually Japan, Taiwan, and Korea. I think all of you got it. And India also had a very strong year. So Japan actually hits 30-year high, after a very long time. And also because Warren Buffett, he's very bullish on Japanese. He increased his holdings in the Japanese trading stocks. So that has actually driven a lot of inflows into the Japanese equities market. And both Taiwan and Korea are tech and semiconductor powerhouses. They benefited a lot from the AI and the tech boom. And India, so you guys mentioned India as well, is one of the hottest market that everyone talked about, like including in the panel discussion this morning. So India actually emerged as the leader in the IPO last year. And it has a structural story that everyone buys into. Yeah, so you guys are correct.
It's quite interesting because I think among the top three performers, I think most of them will have the industrial related to the technology.
Yes,
the same
exactly.
as the developed market, the Magnificent Seven has grown a lot. So when we talk about the best one, let's talk about the worst one. It's quite pretty clear that it is China. So what I would like to ask you is that what is the Invesco's view and outlook on China? Is it still interesting? And what's the fund positioning that you are investing in the Chinese market right now?
Sure, yes, thank you for your question. So this is a question that we always get as well because Chinese equities have fallen out of favor, as everyone know, right?
Everyone always asks.
Yes, everyone asks as well. So we actually have long recognized the growth drivers of China. So that includes exports and that includes property markets. But we all know that these drivers are no longer growth drivers actually. Yes, so economic fundamentals are quite weak. Just now I also mentioned the COVID recovery story didn't really play out. So a lot of us are really disappointed with the Chinese equities market performance. There are also uncertainties because the general public is unsure and unclear how important is the private sector to the whole economy, given all the issues and the crisis we have seen within the property market. So this is what we see in the market. But however, in our point of view, we think that all the short-term cyclical issues and also the long-term structural issues that we have seen in China have already been fully priced in. So I think recent data actually shows us that we are already at the bottom of the cycle. So we think that things will get better from here. And in terms of our positioning, so we actually went from having a large underweight position to now we're more in line with the benchmark. And if you combine Hong Kong together with China, we have a modest overweight as well. So that actually tells you that we are contrarian. Just now I mentioned when we say we are contrarian, we're different. We do something that the market is not doing. The market is fearful of China. It gives us another reason why we should pay closer attention to China. So we believe that China, after a difficult period, will be able to rebound soon. We just need to wait until the investment case plays out. And of course, we are always cautious. Having said that, we are diversified across sectors within China. Our fund hold a mix of different stocks. So we have internet names, we have auto parts, manufacturing companies, we have both online and offline consumer stocks as well. Another question that we always get as well is whether we have property exposure. So the answer is no, we don't have property stocks directly, but we have one consumer stock. It's a furniture fitting company. So it's more indirect kind of exposure, but we don't own any properties in the market. Yeah.
So I think there should be some room for the turnaround in China market.
Yeah, and the fund manager always tells us one thing actually. We don't need a positive outlook on one market for us to perform well or for our investors to make money. We just need to pick the right stocks at the right time. Yeah.
Okay, so moving on, I have seen in the news that many economists right now, they are pretty positive on the U.S. equity. They believe that the market will remain resilient in the U.S. market. But right now, I just want to ask, why do you think now it is a good time to invest in the China market other than the sign of turnaround? Is there some other information that are interesting? What are the good points that Asian stocks, not just only China, but other Asian markets, they can offer compared to the stocks in the developed market?
Sure. So Asia growth attributes are actually quite well established. So it's supported by strong structural trends such as urbanization, rising middle income, rising income as well in general. So we think that this region, another reason why it will perform well in the near term to long term is because we will benefit a lot from the AI and tech boom, especially for Japan, Taiwan, and Korea. Another reason why we think Asia is an interesting place for us to invest is because just now I mentioned the divergence we see in the market. So we see some markets perform really well last year, but some markets like China, Hong Kong's lagged performance. So all the markets are actually interconnected, but however, growth are driven by entirely different factors. So that makes Asia overall a very interesting place for us to invest in. And another reason is that, compared to a lot of the developed market like the US, we are less affected by inflation as well. And then our business fundamentals remain very solid. So I think our EPS growth remains very robust. Yeah.
So, one thing about that many of our investors always ask is that is the valuation in the Asian stock is it cheap like now or and other countries, not just only China, other countries also. So the question is, just would like to know what is the valuation of the total regional looks like at the current stage?
Sure. So this slide here actually shows you the price to book ratio. So you can see the latest as of end of December, we are trading at 1.5 times, which is well below its historical average of 1.8 times. This means that it's cheap compared to historical averages. And we believe that this will narrow. So that's why we think now it's actually a good point of entry to get into Asia. And because just now I mentioned we are valuation driven investors. So we think that there's a direct impact on your subsequent return. So the price you pay today has a direct impact on how much return you make in the future. So I have one slide here, that shows you, from what we see from historical references, at the current price to book level, which is at 1.5 times here, your subsequent 5-year CAGR return can reach over 9% return.
Yeah, this is interesting one. When we invest in the cheap valuation, I think it's quite most of the time we will give a good return to the investor. I think this slide answer pretty clear. Okay, so moving on to the next question. The overall valuation in the Asian market is quite attractive right now, but do you have any specific Asian countries that do you think they offer the best opportunities? Not just only the country, but in terms of any sector that the fund favor to invest into?
Yes, sure. Before that, I also want to show you guys this chart here that shows you the valuation by all the countries in Asia. So the blue bar is actually the 10-year average price to book level, and the dot here represents the current price to book, so the current latest price. You can see on the left-hand side, India is obviously the most expensive market right now. So it's trading at its biggest premium since historical references. And then on the right-hand side, you can see China A are both very, very cheap right now. Almost all the market is trading at book level, price to book level. And if you look at earnings, I think more than half of the market is actually pricing for about a 10 times return. So that shows you that, India on one spectrum is expensive, but on the other hand, China A, Philippines are really cheap markets that we can look for opportunities. And people always debate between India and China, but don't forget, we have all these companies in between India and China for us to choose as well. That's why we mentioned Asia is very, very interesting. And in terms of some of our favorite markets and sectors, I have a quick slide here that shows you our geographical weightings. So 3 markets we currently have an overweight in. So that includes China and Hong Kong combined, and then South Korea, as well as Indonesia. So Hong Kong, China, I mentioned just now, we think that after a long period of difficult time, we think that eventually the investment cases will play out. Now, given the cheap valuation, it gives us a very good entry point to actually buy some deeply discounted companies that we believe will perform well as bottom-up fundamental stock pickers. And then Korea, I mentioned already, we think that they will continue to do well because of the AI and the tech boom. And also very important point about Korea is that they're actually going through a corporate governance reform. So their government actually has stepped in to tell companies, hey, treat your shareholders better, pay them higher dividends, but basically prioritize their interests more. So for that reason, we think that it gives us a very good opportunity to own some operationally solid companies in Korea. And finally, in Indonesia, the reason why we like Indonesia is because we think that the market is now favorable for commodity cycles. So as you know, Indonesia owns a lot of like palm oil companies. We like these companies, and we think that Indonesia is actually a market that shares similar characteristics with India market. But then from a valuation perspective, Indonesian stocks are a lot cheaper than India. So even though valuation perspective, we favor Indonesia over India, but it's not like we don't like India. We just think that at current price level, it doesn't justify. But then it's important to note that actually our holdings in Indonesia, even though we have an underweight position, have been key drivers of our fund performance as well. Yeah.
Okay. China, Korea, Indonesia, and also India. I think there are a lot of interesting opportunities. Other than the country's perspective, can you give some example of the stocks that are in the portfolio? Which one is interesting for the Invesco case?
Yes, sure. So I've thought about this question. I wanted to mention a stock that you all know that resonate to you all. So firstly, in Thailand, you can see we have a small position at the moment, which is in line with the benchmark actually. And the holding we have in Thailand is actually Kasikorn Bank. So I'm sure you all know Kasikorn Bank. So we own a position in there. And another interesting stock idea that I wanted to tell you all is a recent addition to the portfolio. We bought the stock end of last year, and the answer is Grab. So I think you all know Grab better than me and use their services more than I do as well. Anyone took a Grab from home to the hotel this afternoon?
Loyalty customer.
Loyal customer, yeah, same for me as well. So every time when I travel in Southeast Asia, I would use the Grab app as well. So you all know it's a ride-hailing and food delivery service platform. So we like the stock because obviously it's a market leader. It has a dominant position, making it very hard for their competitors to enter as well as to expand. So we have always liked the business. But then valuations were too expensive when they were first listed in late 2020. So we have been monitoring the stocks, and until recently, actually the stock price fell over 80% because there were noises around the outlook of Grab's financial business. So I'm not sure if you all know, Grab actually owns financial businesses as well. So there were noises that they're unsure about how they will perform. So that's why the share price actually fell significantly to a level where we thought, okay, the market isn't fully appreciating the market leadership position that Grab has, as well as the network effects that Grab has built over the years. So we bought the stock when it fell below our fair value. So I mentioned just now when we talk about the investment process, every company in the universe, we actually do all our analysis to determine how much it's worth. So we bought Grab in Q4 last year when it fell to a level that we thought, okay, it's a good time to get into this stock now. So I think it's a very interesting idea, yeah, because you all know this company as well.
This is quite interesting, and it's the style of contrarian, like you say, that it's
exactly. Yes.
Yeah, good. I think we have just less than 10 minutes left. Just want to ask the overview of the fund that what is the key highlight, the key achievement of the Invesco Asian Equity Fund in the past, that what you have done or success
Yes, so about our achievement. So just to highlight again, B Asia, the underlying is our Invesco Asian Equity Fund. First of all, it's a Morningstar 5-star fund. So that's the top best performer peer group in the category, in the Asia ex-Japan category. So in 2023, we're actually the top selling fund in the same category as well. So we have been gaining market share in both retail space as well as institutional space from clients worldwide. And recently, just some awards that I wanted to share with you. In the Asia Asset Management presentation, we have won the Best of the Best award in both 3-year and 10-year category. So, sometimes there might be underperformance in the short term, especially I mentioned, Chinese equities have fallen out of favor, but mid to long term, we are the top performer peer group. And lastly, in 2024 as well, in the Asia Pacific Private Banker Award presentation, this fund is also the highly recommended fund representing the excellency in the fund management. Yeah.
Yeah, this is quite interesting one. So I think we are quite almost get out of the time. So ขออนุญาตสรุปประเด็นที่สำคัญสำหรับกองทุนนี้นะครับเท่าที่คุยมาเนี่ยผมว่ามีน่าจะสัก2-3ประเด็นที่น่าสนใจนะครับประเด็นแรกก็คือว่ายังไงเนี่ยตลาดจีนแล้วก็เอเชียที่ผ่านมาเนี่ยถึงแม้มันจะ underperform แต่ว่าเท่าที่ดูเนี่ยแนวโน้มต่อจากนี้เนี่ยมันมีแนวโน้มที่จะกำไรกลับมาฟื้นตัวอีกรอบนะครับถ้าไปดูBloomberg Consensus สำหรับเอเชียโดยรวมตอนนี้เนี่ยก็มีการคาดการณ์ว่ากำไรของบริษัทจดทะเบียนของบริษัทในเอเชียปีนี้เนี่ยก็น่าจะเติบโตประมาณ 20% นะครับแล้วก็ประเด็นต่อมาก็คือเรื่องของ valuation ของหุ้นเอเชียที่ตอนนี้มันก็ถือว่าเป็นโซนที่ค่อนข้างน่าสนใจอย่างที่ทางคุณจูเลียตได้โชว์ในสไลด์หนึ่งนะครับที่ว่า price to book value ตอนนี้ที่ 1.5 เท่าเนี่ยถือว่าเป็นระดับที่ค่อนข้างต่ำมากเราไม่ได้เห็นระดับนี้มานานแล้วนะครับก็เท่าที่ทราบเนี่ยส่วนใหญ่ price to book value ของหุ้นเอเชียเนี่ยจะอยู่ประมาณ1ปลาย 1.7 1.8 อะไรเงี้ยนะครับซึ่งจุดนี้เนี่ยก็เป็นจุดการเข้าลงทุนที่น่าสนใจที่สามารถที่จะเสนอผลตอบแทนที่น่าสนใจในระยะยาวได้นะครับแล้วก็สุดท้ายเนี่ยก็คือว่าถ้านักลงทุนสนใจที่จะลงทุนในหุ้นเอเชียเนี่ยผมว่ากองทุน Invesco Asian Equity Fund ที่ทางB Asia ฟีดไปเนี่ยก็ถือเป็นทางเลือกที่น่าสนใจเพราะว่าเท่าที่ดูผลตอบแทนจากการดำเนินงานที่ผ่านมาเนี่ยก็คือค่อนข้าง outperform benchmark อย่างต่อเนื่อง 10% ต่อปีนะครับก็ถือว่าเป็นกองทุนที่น่าสนใจนะครับทีนี้อยากจะขอเข้าสู่ช่วง Q&A นะครับไม่ทราบว่าท่านนักลงทุนท่านใดมีคำถามที่สนใจจะถามสามารถเชิญได้เลยนะครับ
ช่วงนี้เข้าได้เลยเหรอ
Is it a good time to get into the Asian market right now?
Yes, so we mentioned just now already. Now it's a very good reason for us to get into Asia because I mentioned it's a year of divergence, which means we see some markets perform really, really well, while some markets look like it's suffering temporarily, like the Chinese equities. We think that it's a good time to get into Asian equities because we can take advantage of a cheap entry point. And another reason I mentioned from a macro perspective, we are less affected by inflation as well, supported with accommodative monetary policies as well. So another reason is because we think that the inter-Asia opportunities is huge as well, which will continue to support growth in the region. I can actually receive some questions here from the QR code. So let me see if I can read out some of the questions here. Okay, one question is actually about the view on Vietnam market. So yeah, actually I heard from our clients, including BBLAM, they told us that the Thai investors love Vietnam now.
Right, many of the value investors in Thailand, we are interested to go abroad, and Vietnam is one of the interesting market. A lot of fund flows.
Yeah, so Vietnam is actually an off-benchmark market, so it's not included in the MSCI Asia ex-Japan market. But then we recognize that Vietnam is a country with a good prospect. So the investment team is actually spending more and more time looking at Vietnamese stock. So one interesting point is that Vietnam is actually the first Asian country to be cutting rates very aggressively. And the government has also been pushing a lot of the policies to stabilize its property market. And we also recognize that Vietnam, they are actually doing a lot of anti-corruption campaigns as well. In our fund, we actually own one company in Vietnam, and that's actually the Vietnam Milk Company. So it's one of the largest dairy company. It has market share of over 60%. So all the Vietnamese consume, almost all of them consume the brand. So the reason why we bought into it was because of valuations again. So at the onset of the Ukraine war, when the raw materials and the cost to make the milk, so which is the powder, went up, so the share price of that company actually dropped a lot. And we took advantage of that and bought into that stock. Yeah.
That's interesting. And but anyway, Vietnam is still not in the MSCI index in Asia.
But our fund can actually own off-benchmark stocks. So Australia as well, it's off-benchmark, but we can have the discretion to invest in Australia, Vietnam, as long as the fund manager sees a potential and opportunities there.
Yes, and I wish that if Vietnam can be included in the MSCI Asia Emerging, I think that's going to be more fund flow and more weight that the fund can invest into the Vietnam market.
Yes, and it makes the overall Asia more interesting as well.
Right.
Yeah, because we have more and more markets, right? So we can actually have a very balanced portfolio, and at the same time, we also are because we are high conviction, so we can choose where we think we see opportunities in.
ท่านใดมีคำถามเชิญครับ
Thank you for the session, which is full of hope. So I have two questions now. The first one would be the stickiness of inflation. And if the rate remains high for longer, do you think this will affect the Asian stocks?
Oh, very, very good question. So actually this morning we were watching the news and we saw the latest US data came out, and it shows that some of the inflation prints are actually still higher than expected, and now the market is still determining when will the Fed start cutting rates. So originally we all have a very bullish outlook that the market might see the first rate cut in the first quartile, but now we are already at the end of first quartile, and the market now says we should expect to see the first rate cut in June. So this morning when the latest figures came out, it shows us that inflation, as you said, is stickier than expected. So you're right, the biggest risk to the Asia market right now is that if the Fed rates remain higher for longer, and that also means that the US dollar will be stronger for longer as well. So you're right, that's probably the biggest risk that we see in the Asian markets. However, our in-house view is still in line with the market. We think that we should see the first rate cut sometime in quarter two. So late June perhaps, if not latest by quarter three.
The reason why you use the PBV as a predicting point of the stock, but not
So we use price to book as a historical reference in terms of how much on average, a 10-year average of each market is worth. So we think it's a good indicator for us. And we do look at earnings as well. So we look at both actually, And then I mentioned because we are valuation-driven investors. We think that the price at which we purchase a stock will have direct subsequent impact on our return. So that chart there is just to show you that at current price to book level, which is at 1.5 times, we can expect about a 9.3% 5-year CAGR return. Yeah. Thank you so much for all your questions and for your participation. Yeah, I'll give you a mug as well later for the questions.
Okay, please.
Why did you underweight Taiwan and overweight South Korea?
Yes, so that's a great question. So I mentioned just now Taiwan and Korea are both semiconductor powerhouses, so they share similarity there. But the reason why we favor South Korea is because the Korean stocks are cheaper compared to Taiwanese. And also another reason that I mentioned as well, that Korea is actually proposing this value up program, which is actually a corporate governance reform process. The government of Korea is actually taking a leaf out of what the Japanese government did to improve shareholders' interest, to improve dividend payouts. So we think that the market isn't fully appreciating it yet. So that's why we have a strong preference for South Korea stocks over Taiwanese stocks. And we do own Taiwanese stocks in the portfolio, but we have been trimming because a lot of the stocks have reached our fair value and we decided to take profit there. Yeah. We are coming on top of the hour
Do
already.
you still
Right?
have time?
Maybe
Or-
one last question, please.
Please.
Due to the geopolitical risks between Taiwan and China, it will have the impact to the Asian market.
Yes, correct. So from a macro standpoint, so that tension will always be there. So we don't expect this to, basically it's always going to be an issue between China and Taiwan. However, because we are fundamental stock pickers, we don't take any macro bets. So we are very focused in looking at the business fundamentals so that, doesn't really affect how we manage our portfolio. Yeah.
So I think we are quite run out of time. Thank you very much, Julia, for sharing.
Thank you so much for
informative
moderating our session, and thank you all of you for being here today. Khap khun ka, everyone. Thank you for supporting BBLAM. Thank you very much.